Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find us on the website. I'm on Twitter with the handle Chrissy Farah, Instagram, as well as Discord. This is for educational use, remember that. And we're going to go over some different illustration. We use this for illustration use only. We're not a broker-dealer. Past performance doesn't indicate future results. And if you need to copy the material, please take a look at the website and see what the disclosures are, and you can get in contact with us. That's first of all, before I go in details, I want to tell you how to look at the market, the trends, the charts. So we're going to take the overall market and look at what's the chart in front of us telling us. We're going to look at the concepts of taking a look at small cap, mid cap, financial, energy, high beta, industrial, value, and a lot of stuff to cover. I'm going to keep it simple and fast to the point. If you need more information, you can contact us once again. We want to be flexible and fluid in the market, like the state of being fluid. It's not rigid like a piece of steel. Open to wide range of outcomes. We don't want to predict. We don't want to forecast. We want to be able to get the ego out of our heads and be able to trade the instrument that you are trying to position yourself in the new trades in relationship to what you hold for the short term, midterm, and long term. So let's break this in detail. And when I come back to the last slide, end of the video, and I want you to pause it and be able to look at it in detail. Once again, I'm going to put it on. I'm going to give you 5-10 seconds to look at it. I have the different technology sectors, the NASDAQ, large cap, beta, mega cap, and value in relationship from Schwab, iShares, Spiders, as well as the industrial, small cap in relationship to bond, gold, and silver, and energy. In relationship, how do they compare in the overall market? And is the trend changing going back to large cap, technology, speculative stock, instead of the one we have to worry about is the small cap because it's doing catch up. So remember, it's not outperforming the market, it's range bound. Let's break it down in detail and we'll get started with the first slide I have in front of us. Here we go. I have the S&P, the NASDAQ, and the Dow here in relationship to the overall weekly chart. We got an inverse hammer, which reversed from being bearish to bullish the prior week. We bounced off the 18 simple moving average on the 3-year weekly, and we continued higher to make an annual high from January in relationship to the release of the COVID-19 and the September highs of last year. Let's take a look at it and look at it on the daily chart so you can see where the levels are. And I haven't highlighted them here. This was the September, August high. We fell down, we came back, we fell down. This is the November release of the COVID vaccinations. Then we had the January low, then the February, March. Then we continued higher. We had range bound, side action for a couple of months since the May, June, and now we are in July. And finally, we broke out on the combination of the three instruments. Let's go now take a look at it in detail on a smaller scale. I'm going to only use 6 month out or 9 month max so we can see the shorter term in relationship to where we are. Let's start with the Dow Jones Industrial Average YM. And YM, you can see I have the annual high here from December. Eventually in January, that was our low. This is the March low. End of March, middle of March before we went to April, May, June, July. This is the June area which we fell down. We retested this prior area in March and rallied back up. But we had side action last week, down move, and everybody was thinking, okay, this is a triple top or double top and we're going to fall lower. Eventually they reversed on the 116 simple moving average. It's been holding us very well since November. And we can connect this line with this in order to stay in relationship. We'll use that line as our anchor for the uptrend in relationship to the downtrend. We anchor this, we hold it up, and we are in an uptrend. We retested it and continued higher. So let's take a look at now the NQ. And NQ, we have a similar situation. This was the annual high in December. Eventually, we fell down in March. Then we continued higher in April. Then May we fell down. And since then, we continued higher. We were in a linear regression channel. You see those two lines I had. I'm going to re-anchor, and we're going to get rid of this line, remove drawing. And we're going to anchor this short one here to this low here. So here we go. This is our line in the sand on the short term inside this wedge continuation to the upside, or we do fail. And if I anchor this one from the bottom to the nearest low, we have a long way to get to down here, and that's the 116 simple moving average, the 50. We are far away from the 50 simple moving average. If the Nasdaq gonna be a secular bull market to keep the market going, we have to keep an eye on it. This is not the worry about the Nasdaq. We have to worry once again about the small cap, and I keep repeating myself, and I want you to see the small cap last. Let's take a look at the ES, the Fortune 500 companies. We can see it is in a similar situation from the November, the January low, the March low, then we continued higher. So if I anchor this one from here all the way up, you can see that we broke it right here once. Then we retested it here a little bit, and we are holding the 50 simple moving average. If I zoom in here in the consolidation, this is the June high and low. Then we continued higher. Then we fell back down in July. Then we are back up in relationship to creating an annual high. And my eyes are on the 18 simple moving average, as well as the prior high, annual high, which was the 43.8450 as my line in the sand, and 43.75 if we continue higher to the up linear regression channel. Let's take a look at now the small cap, which is either the IWM or the IWN or the /RTY, which is the future. We can see we had that move up in November till December, and that was the January low. Then we continued higher. Since March 15th of this year, the Russell has been range bound in that 4-month range. If we look at the small cap and we zoom in here in relationship to the prior 3 months, we are still in a downtrend. We look below the monthly fib of June. We retested the 161, and we came back up to almost close on the weekly at the monthly fib low in June. Does this mean small caps are weaker? Possibility. That means there may be rotation in those sectors. Be open mind to what's the chart giving you, not what you think. Let's take a look at now GC gold. /GC. And we can see GC was in a linear regression down channel from before. It tried to look up. It broke up. Could not make it. Fell back in. Created an H pattern. Everybody was thinking it's going to go lower. And it eventually reversed. If we look at this linear regression channel in here, we are in a downtrend trying to break the 1820 to continue to the 50 simple moving average and the 200. These are in my eyes on the monthly fib. If we cannot, my annual fib is the 50% fib for the annual chart on gold. If this is lost, it's going to tell me, hey, they are not performing compared to the technology sector. Let's take a look at now CL, which is crude oil. And CL had a small hiccup. If we connect those small lines from this area to here, we are in an uptrend. But if I take the major one from here, from the November low to here, we can see that we retested this area. We fell below it, below the 50 simple, and this channel was violated. We fell down to come back and close on the monthly above the prior March high, which is $68. And that's what we were looking when we came back above those levels. Then we broke those three lines from the May and we continued higher. We fell down to retest that consolidation in this area. We bounced back up. We are above the monthly fib 50%. Our concern that does the 50 simple moving average hold, or does this down channel act as resistance, or do we break the 18 simple moving average and the 61.8 from the high and low of this recent retracement? So let's take a look at BTC. And we're going to keep an open mind on GBTC, which is the ETF fund, or the BTC, the future, or the coin itself. I know I have a lot of fibs here. I have the annual chart fib, which is here. We never filled this gap. I was really looking to fill this gap. We have tested that 29,000 so many times from the prior year. This was the December, and this is the two tests in January. Then we continued and broke up, and I said this gap after the 65,000, be careful of it. We may retrace. We never filled 100% of it. We filled a portion of it. We looked up, couldn't make it. Then we have this professional gap when we fell down. Everybody's looking for an H pattern to continue lower. Technically, the last 3 days, we had a little spike in volume right here on this big candle, and it consolidated right under this down channel. I am concerned if it doesn't break this channel in order to continue higher. And what we're going to do is zoom in here, and I'll show it in an ETF form, so that way nobody's biased to either side. So if I look at it from here, let's just zoom in here. I want to show that the June high and low is right here. So we retested this area and bounced back up. We have not been able to clear the monthly fib from the 38.2, which is the high here, or the 50, or the 61. We have to hold on to this down channel as our resistance line. If it breaks above, clears the 18 simple, clears the channel, you look for the prior 50 and 61, which will get catch up with the 50 SMAs here. But so far, it is in a reverse uptrend. We're not biased. We're going to trade what's given to us if it's going to continue or come back in. So let's take a look at GBTC so you guys can see it. It's the ETF. I'll break, the GBTC. That's the ETF fund. So you can see it a little bit more clearly with the gaps that we have from the annual high. The retest here couldn't clear it, and we fell back down. We do have a professional gap up here in the gap because it doesn't trade in the overnight when it opened up at 6:30 when the market was high, but the 18 simple is holding it down in this channel. If we do not break and come back to the 50 simple moving average and the 200, the prior breakdown of these candles here, be careful because the reversal would be lower to the prior annual high than continuation. So that's how we look at GBTC. Let's take a look at ETH, Ethereum. And we can see Ethereum from the beginning, since it was, put on the exchange, it rallied up, then it had a gap, then we fell back down. It's in a downtrend, trying to reverse. I would consider those two bottom as a double bottom. If I cannot clear this linear regression channel to the downside and the 38 and the 50 and the 61, which would be the backside of this prior up linear regression that we broke down from, and I cannot retest this one or that one up here, be careful of it because it may reverse and come back down. I am not biased to either side. We trade what the chart gives us every time. So let's go now. Take a look at some ETFs, and what I want to do is start with the RSP. And the RSP, you can see this exchange traded fund for the S&P equal weighted ETF. You can see the annual high was up here in May. It's trying to grind up to come back and break above and continue. This is why I'm showing some of the ETFs, and I'll do some equities. Let's take a look at NYA. This is the New York Composite Index. This was the high in June. We have a couple of tops here if you consider 1, 2, 3, 4, 5, whatever. We bounced off the 116 SMA. We are holding this uptrend. If we can continue holding this uptrend and to go higher, that would be great because it has been range bound since April. So let's see what the market gives us. Let's take a look at XLK, and I'll show you some weakness in other ETFs as well. We can see that it's continuing high. It created an annual high. XLV, which is the healthcare sector, we can see it's on an annual high. Broke out of those one. I mean, this, if you consider the June high and low for the monthly fib, we broke the 23 extension, which is 123. I draw them sometimes in upside down just to get references. I do not have the 78% fib here like the 23. We tested this. If it's going to continue to get to the 100, which is the 200%, or does it reject and come back inside where the prior breakout, the 129.60. Let's take a look at some IYM. This is the this is a broad market multi-class allocation for some of the small caps. We can see we are in an uptrend here. We eventually broke it down. We are in a linear regression down channel. We have the 50 simple moving average. The 116 is trying to come back and break above to get to the 38, 50, 61. If we can clear the 50, the trend is up. If we cannot clear the 50 and we fall back down, we're going to pay attention to that 122 area. This is a very important area that we do not lose it, and that's the 200 SMA, which is at 121, which will catch up a little bit higher as long as we are moving in that direction. So let's take a look at some other ones, and let's take a look at one SCH. We'll do the P. I'll do the P first, and I'll do the B. As you can see, this is the strategic trust for the ETF, which is equal weighted. Some of it is technology. There's different sectors, so I want you to understand. You can look at the iShare, you can look at the Spiders or Schwab's or Ridex, whatever you want to see, so you can get a more variety of electronically traded funds. So let's do two more, then we go to bond one. So let's try to take a look at I believe it's OEF. This is the iShare Trust for the S&P 100. As you can see, we are in an uptrend, and we created an annual high on the S&P 100, similar to the QQQ, which is the NASDAQ 100 that we went over earlier. So keep an open mind on these different sectors. If we look at GLD, which is the gold itself, we are in a symmetrical triangle, but we are in a downtrend, trying to go back in an uptrend, compressing in a tighter range. As you can see, we're going to connect these two dots here, which is the pivot points, and we'll connect this one here with this one here, and you can see that compression. We are testing the backside of this channel. If this is going to continue back up, we have to see break this symmetrical triangle to get to the 200 and the 50. If it falls through the 116 SMA, cannot hold the 18, we'll look for the backside of the channel at the major trend from prior. So we're going to trade what we see. Let's take a look at TLT. And this is the bond sector. If the bond's going to perform well next to the S&P, next to the NASDAQ, we have to be open-minded by looking at these sectors and not be biased to either side. So sometimes TLT can outperform the SPY. We are in an uptrend because interest rates are almost nothing and government is holding it down because they keep printing down and they keep saying that inflation is not there. But we do see it in price in the retail. You go to a store to buy a gallon of milk, you know that. You go buy a loaf of bread, similar thing. You go buy a product like consumer products such as Nike, such as Reebok, Puma, Lululemon. You go to Microsoft, you go to a computer store, you are buying at that retail, but some of it you can get discounts. Sometimes you can't, but the prices have increased over time. So let's take a look at the SPY. Oops. SPY. This is the S&P 500 ETF. You can see it's on an annual high. We can take a look at the RSP, which I actually included in the slides that I did earlier. So this is almost on and out since it's being range bound. Do we get a breakout or not? And last but not least, let's take a look at a couple of equities. AAPL. We can see AAPL doing catch up. Let's take a look at Amazon. Similar thing, it's reversed. Let's take a look at the GOOGL. Annual high. Let's take a look at NFLX. It had a little reaction after the earning. It fell down. You remember, there's Verizon, there's AT&T, there's Disneyland. There's a lot of different companies that are streaming. Is Netflix compared to Disney have more subscribers? Yes, it does. But the other people have what? They have parks and other stuff. So we have to keep an eye on that 50 simple moving average and that linear regression that we fell to. Does it keep that 50% and the 61 in order to continue back up? Or do we fall back to the major backside of this channel down here? I like to see Netflix continue higher, but let's see what it does. Let's take a look at Tesla because it had a nice move on a couple of weeks ago and eventually Tesla got compressed in that channel. A lot of people looking at electric cars such as NIO, Li, whatever, and battery companies. I'm not saying batteries are good or batteries are bad or gas is good or gas is bad. I think a regular car that uses gas still has better, actually better to the environment, because if that battery, the car gets into an accident and you cannot recycle that battery and the battery gets burnt, that's hazardous material. That alone can cause more than 10-year life of a regular car. I'm not being biased. Electric cars are going to come and get better over time, but we have to solve that situation. So let's zoom in here and we can see that Tesla is in a symmetrical triangle trying to either hold the 50 SMA or break above the 18 and the 116. My eyes, if it does not hold the 50 in this prior 620, I'm looking for the downside. If it breaks up, I'm looking for the backside of this channel and eventually the $700 plus, which is the zero line on the annual chart from last year in December. We have not been able to get above that 720 or 718.72, which is the annual high for the year from March. You can see it, March 18 to that high. So I'm just anchored it because remember the holidays is December 31st, correct? And December 30, December 28, you know, when we go to Christmas, New Year, before the market opens up, when we come back. The anchoring, I always show the overnight action from that Sunday or Saturday or the long weekend holiday, because sometimes you have those little gaps in price action. This is why my anchoring is that way, okay? Let's take a look at the USO, which I did not do the oil. Oops. And I'll go back to the ES. You can see that USO is trying to climb back. We have that little gap. I showed it on CL. Let's go to ES, and we'll finalize that last slide that I promised everyone I will do. We can see that the ES has continued nicely to the uptrend, and we created an annual high. We have to have an open mind because these are 1, 2, 3, 4, and then this is the engulfing candle that overlapped the other one, and we continued higher. My concern, we hold this area, and we do hold the 38.2 fit extension. If we do, that's great. If we fall down, I look at the 18 SMA, then the backside of the channel. Let's take a look at the profile using the monkey bars before we end this video. As we can see, I have 10 days volume profile. This was the consolidation prior, before we broke out. You see, we had the puck here, puck here. We fell down, created a puck, but the time spent was higher, so the sentiment was higher. This was lower, but the POC continued higher, and we retested the prior virgin control points. We cleared them, and we continued higher. And this one is a virgin control point, which has not been revisited, or this one down here. So these two are very important that we hold to continue higher, no bias. So we trade what we see, not what we think. And I hope this was helpful. And I want you to remember, if there's anything you need, you can always DM us or send us an email. We'd be happy to help. Over and out. Enjoy your Sunday afternoon.